Hi everyone, welcome back to our weekly trading forecast for the week of 28th of December and into a new month, which is the 2nd of October. All right, so this week itself, do expect volatility to be low in the beginning of the week because number one is that it's coming to the end of the month. So usually at the end of the month, it also means to say the monthly candle is going to fully formed. And of course, while waiting for the NFP data, usually market will be kind of ranging with low volatility and a bit of sudden spikes here and there. So it is not a very good period of time or background to actually try to engage trades. But if there is pretty good setup, of course, you can still try to go in, but try to go small, right? Take smaller risks during this period of time, all the way till NFP is over and we'll have a clearer picture of the entire market condition. All right, so first of all, let's kick off with the dollar index as usual. Do take note that today is actually a Monday, all right? Market has already opened. So for the dollar index right here in the daily charts, right? First thing is that we do see that the dollar has already recovered pretty well from its low, a 29-month low, somewhere close to 92, slightly below 92 itself, and it has already completed like two waves of a bullish trend or a bullish pullback. So it actually formed a rising channel, as you can see, and then it also got resisted at the bigger falling channel, which has already lasted for 6 months, and we can see there's already slight breakthrough as well. So that itself, technically speaking, it does say that the dollar may continue to climb in the coming weeks. Of course, NFP will play a big role in this part, but technically speaking, I think we do expect another wave of a bullish pullback for the dollar index all the way into this supply zone at the top. Okay, as you can see, this is a very important level, important support previously, somewhere between 95 and 96. All right, so that is going forward what we do see. And based on indicator, okay, one and the only one indicator which I really use is the MACD. We can see the all the lines are above the zero level, and the bulls are building up, buyers building up. So this in itself is actually a background of a bullish market for the dollar index. So that's another indication technically that dollar could continue to climb further. Let's go into the smaller time frame. So in the 4-hourly charts, yes, we have seen the price broke above the top of this 6-month channel, and then it pulls back. And as market opens, we do see that price is little changed right now. Right, as expected, there's very little volatility. It came up, came down, and right now it's back to the same, almost the same price as the opening price for today. So do expect a little bit more pullback. All right, maybe somewhere to this level right here. All right, off the chart, somewhere 94.4. That's where the dollar might continue to rebound and goes higher. So it will take some time. And going forward, once we find an opportunity to buy the dollar again, all right, we are targeting, all the way back to the lowest is about 95.3. This zone itself, as you can see, all right, there's a lot of executions, a lot of trades right here. So this does provide a some form of a supply as well. So do take note. So that is yeah, from 95 onwards. And I think fundamentally we also learned that the dollar is right now in demand due to increased risk sentiment, of course due to the pandemic, due to the US-China trade war as usual, which just got worsened. So That's pretty much for dollar as of now. And because gold is so overpriced, so which is why gold came down and dollar became a better choice as a safe haven currency at the current moment. All right, so that is for the dollar, and let's quickly take a look at the euro dollar. So euro dollar wise, right in the day charts, okay, we also have this rising channel, slightly shorter one, which is about more than 4 months, which has already broken a couple of weeks ago, and has sent the euro dollar even lower, and that itself has actually broken out of this rising channel, more like a ranging channel instead. Right, once it broke below, it broke again out of this rising channel as well, which is why we do see a very strong bearish trend, which has already happened last week. So again, just like the dollar index, it has completed two waves of a bearish trend. Found a little bit support right here, but continues to go down last Friday, and right now it seems to be pulling back again. All right, pretty much expected as well. So market opens right now. Again, just up and down, small volatility, consolidation seems to be pulling back a little bit further. So off the chart, we can see that somewhere back to this level, 1.166, around that level, could be where we can continue to look to sell. And of course, back to the day charts, we're also seeing the MACD showing a bearish bias. So in this coming week, if price were to pull back first, then we will definitely try to look for a good position to sell the euro dollar again. So that's pretty straightforward. Now, talk about pullbacks. I think we also want to know which is the most important price to look out for if we want to continue to sell. So definitely, this is definitely a falling channel, right? At the most, we should only see the price pulls back to this level, 1.175 to 1.176. Before that, the next better price will be somewhere at 1.17. So within this level itself, in my opinion, would be the best price to sell. But however, the current range right here, okay, if the price were to due to low volatility and it just range within this level, then definitely we can start to build some position as it reaches or pulls back to 1.1678. Yeah, so that is the first level where we can consider to start to build short position for euro against US dollar. Target wise, not too low. Okay, we're not looking at anywhere too low, but the best target right here we have, as you can see, is at 1.145. We can see very strong resistance back in the 2019 period until it was broken above in mid 2020, somewhere in July. Okay, not too long ago. So this is the best target. Okay, but whether it will reach this level, that will be something we have to discuss and observe further. All right, next I would like to pass my time over to JJ, right, to share his trading plan for the week.
First, we have this pound dollar. As we can see, after a clean break of this long-term trend line since 20th of March, it has retested and continued its downtrend. And it has actually managed to close below this level of interest. You can see this zone here. Every time price comes, it's either resisted or supported. But after breaking below this level of interest, it got supported by this current trend line. And as we can see on the smaller time frame, it is now consolidating upwards. And as price has broken above this consolidation channel, the next price we could look to sell the pound dollar again would be the previous breakout zone, which is at this level, about 1.291. because similar to the previous consolidation in length, if we measure it around here, we would reach about the same point of the previous breakout channel. So next would be dollar CAD. Similarly, as the dollar is strengthening now, after a clean break of this very long-term downward trend line from March as well, dollar CAD has been appreciating ever since and also has closed above this level of interest. And on the smaller time frame, we can see that every time dollar CAD breaks above a level of interest, it ranges for a while before continuing its trend. So this week, if we could expect the same ranging pattern, we could look to buy dollar CAD again at the bottom of this range at around 1.334. And if price were to be supported at this level, there will definitely be more upside, as the next level of resistance would be the previous head and shoulder neckline. So this will be the two pairs that I'll be focusing on.
All right, thanks JJ for sharing. I like the idea for both dollar CAD and pound dollar. Very straightforward, very clear levels where we can engage the trade accordingly to what the trend is right now. Yep, so talking a little bit about pound is that I think it is pulling back right now as, you know, dollar may continues to climb a little bit further as well. And pound is pretty much is very oversold as compared to other major currencies. And with the support by this trend line in the day charts, definitely it does give some good reasonings, you know, for it to pull back even further. So all the way back to the level that JJ has just mentioned. The best is maybe about 1.3. I think 1.3 is definitely the best, the strongest supply zone we have right now. But I like the idea of, you know, taking the previous pullback as a reference in terms of volume and duration. So we just want to watch out for the current bullish run right now we have. Okay, does it go too fast, or will it actually conform to what the previous pullback is and go in more of a zigzag manner? And that will definitely provide a better chance for us to sell as it completed the same volume and duration of such a pullback. All right, so I will come back to my screen right now. Next, definitely most focus on is the gold. So for the gold, right? Yes, same thing. Last week, due to the dollar appreciation, and of course, I think at the same time, a sell-off in for the gold as well, which is because it's definitely too overpriced. Something which I've been talking about for quite a couple of weeks. So it actually broke out of this symmetrical triangle last week. In fact, it actually completed a Elliott's triangle formation, and it follows through. So it came all the way down right now, seeing that the price is being supported at the 100 MA, but not much sign of buyers at the moment. In fact, what I do think is that it can continue to trade lower until it reaches somewhere within the 1,800 supply demand zone right here. All right, why is that so? Because this demand level, or this level itself at around 1,008, okay, in general is a very strong resistance. Okay, in the past, if I were to go back to the weekly time frame, okay, you can see that this level itself is a truly strong resistance throughout 2012, and this is also the very level that once it was broken out of it, as a couple of days of range, and it started to shoot all the way up and break a new historical high. So this zone itself definitely is a very key interest area of interest, and definitely this will be where I would definitely want to start building up some long position for the gold. All right, so that is for the that's the current outlook for the gold. So this week, do expect that gold will fall into a range if it's able to continue to fall, throughout the week, then do expect that once it reaches the 1008 demand zone, most likely it will start to range for quite a period of time. So right now what we want to see, or what we want to identify, is what could be the current, what would be the range of the high and the low in this range itself. So just practice some patience, right? If you want to still continue to sell gold, definitely you have to wait for some significant pullback, at least back to some supply zone, which off the chart what we can see is somewhere right here between, around the 1,900 level. That could be the next price if you still want to sell, but don't look too far. Okay, if you're able to just capture a good wave, a full wave of a bearish trend, I think that would be pretty good enough. Okay, if not, going forward, in the long run, fundamentally, gold should still continues to trade higher. All right, demand for the gold will still come back as long as the risk sentiment is still around pandemic and everything. And of course, US-China trade war, all of these are big contributors to the increased demand in the gold. All right, next, let's talk about the US30. All right, US30, the Dow Jones. Okay. Last week, it actually continues to trade lower, and however found some supports at the 100 moving average, very similar to the period in June. Okay, we saw that the price got supported at the 100 MA, okay, twice, went all the way up, and right now the same thing is happening. So most likely the Dow Jones could be trading in the range. So going forward, I think what we can do is to look for opportunity to sell as it reaches the top of the current range right now, starting from 27,500, okay, all the way to somewhere at 27,750. So off the chart, this is what I can see. But otherwise, other things that we can take note of, all right, is this falling trend line. All right, with this falling trend line, definitely technically we are able to find have a little bit more confluence with moving averages as well, top of the range. Falling trend line altogether provides a pretty good area for us to actually sell it, previous support as well. So this price itself specifically will be 27,600. So that's where you can start to build some short position for the Dow Jones. But what I do expect is that what you can see right now, okay, this is the first rebound, okay, breaks out of the previous high right here. Okay, it pulls back, but it did not exceed the low right here, and it goes up. Okay, some people might know what I'm already trying to say. Okay, so what I probably expect is a little bit pullback. Okay, push up again. Okay, try to test this level before it actually start to go down. Right, another formation of a alloy, motive wave in this manner, but part of the correction within this range. So this is what we can probably envision for now. Okay, if that really happened, then that definitely provides us a good formation and price level as well to sell the Dow Jones again. So that is the current outlook, okay, for the Dow Jones. Definitely when it falls back to the previous low right here, okay, back to the 100 MA, okay, we want to observe for supports. And if it sell from the top, then that is one of the best price to take profit if you are to sell the Dow Jones. All right, so that is for the Dow Jones. Last but not least, I just want to share about dollar against Japanese yen. So dollar against the Japanese yen, there is some sort of a divergence. But just before that, okay, in the day chart, okay, I just want to show you guys that this trend line right here, in fact, this entire ranging kind of downward range, right? We are now seeing the price is coming back somewhere near back to this level. So Last week I was actually trying to look for an opportunity to sell, but however, because dollar is so strong, it is actually not that easy to do so. But what we have right here, okay, is that the dollar yen has made a rebound. The first wave right here pulls back, all right. Another second wave, a much stronger one. Right now, it is going back into correction. So waiting for another wave of a bullish trend, hopefully back to this level, and that will provide us a opportunity to try short selling the dollar against Japanese yen. But however, if the dollar continues to rise in, demand continues to climb higher, then there's a good chance that it may break out of this level, because we have to consider that the current support at the bottom right here is indeed very important. This support level at 104.6, okay, is a weekly support for as long as, close to 4 years, which is why it wouldn't be a surprise that, the bulls continues to build up back for the buyers, and for the price to break out of this and then retest the falling trend line right here in the day charts. And also due to the divergence that we have right here, the MACD divergence, you can see that the price right here, the low is getting lower, but however, if you look at indicator MACD, the lows is actually getting higher. So there's a divergence, meaning to say reversal is most likely to occur. And so we also want to watch out for the lines. If it cross above the zero level right here, it will turn into a bullish background for the dollar against Japanese yen. All right, so that is the for the dollar against Japanese yen. And with that, we have come to the end of our weekly trading forecast for this week. Thank you for watching, and we will see you again next week.